Coming up on The Mint, financial literacy is the cornerstone of smart economic decision making. It refers to the ability to understand and effectively manage personal and business finances, from budgeting and saving to investing, borrowing, and planning for the future. In a world of rising costs, digital finance, and complex credit systems, being financially literate is essentially for long-term stability and success. Now, despite its importance, financial literacy remains a major gap in many communities, affecting individuals, families, and even entrepreneurs. Now, we speak to a panel of experts in financial literacy on The Mint. The Mint will be right back. Don't go anywhere. Focusing yangu. Come back to The Mint. We're coming to you live from Welcome back to The Mint. We're broadcasting to you live from Zimbabwe's capital, Harare. I'm Eben Mabunda. Now, we are joined in the studio by Alphonse Tinashe Maketo, an author as well as entrepreneur, as well as an stock market enthusiast. We're also joined by Charity Moyo, who is a mining consultant for women in mining and has worked in the banking sector for over 15 years. Hello and welcome to The Mint.
Thank you so much.
Fantastic. Let's start from the top. What is financial literacy and why is it important? Alphonse.
When I'm talking about financial literacy, basically these are the means by which we want everyone to be involved in issues to do with their finances, how they're able to get the funds, how they use them, the way they dispense of their expenses, take care of their income, to such that everyone can know exactly where their money comes and where it goes.
Right. Charity, would you also want to weigh in on what financial literacy is and why it is important?
All right. I think I'll break it up looking at the women in mining space, because financial literacy is something that we are currently working hard on to ensure that women are aware on when it comes to handling their financials. For instance, we are teaching them that you need to learn to record your finances in terms of how much income you're getting and how much are your expenses. Are you being profitable in what you're doing? So in terms of women, I think we still have a long way to go. And it's quite an exciting thought process, I can say, when we talk about financial literacy.
Right, of course, much to decipher from that. But let's get into the ABCs before we move on to the algebraic expressions of the subject. What is the difference, Alphonse, between saving and investing, and why are those two key terms important?
Okay. Saving basically refers to setting aside a certain amount of money for maybe immediate uses, whilst investing is a deliberate process targeted at the long term, whereby you're investing a certain point, putting aside money to get returns. Then the two differs in that saving normally is for short term, whilst investing is long term. Again, saving doesn't really give those moments, the risk moments that you are always looking for. Whilst on the other hand, investing is a risky venture to undertake.
Right. I will relay this one to you, Charity, given the inflationary environment that Zimbabwe has been subjected to and some of the currency issues that Zimbabwe has had to grapple with for decades on end. How then does one get to navigate the investment terrain in Zimbabwe?
I think maybe for us, especially in the mining, in the women in mining space, when it comes to investing, it's quite important for you to make the right decision as to what mineral that you're going to be dabbling in. For instance, if you look at gold at the moment, it's got very, very interesting prices. We're talking of $100 per gram. So you then find that even the cost of mining, it hasn't changed much, it's still the same, but the income has increased. So that means that I think in the short term, medium term, we should see more miners getting into the investment space, getting into savings, more savings, because people now have more disposable income.
Look, that's a bit more on the more complex aspect, because when you look at mining, that's very much capital intensive. I'm thinking through the lens of a 22-year-old worker who lives in Dangamvura, or a 36-year-old widow who lives in Soshanguve. How do they navigate the investment terrain in Zimbabwe?
Well, it becomes very difficult, especially when you then look at an average person, especially somebody who's not in the business terrain, because what they look at as inflation, they are looking at the prices of basic commodities when they look in the shops, when they get into the shops, and also they're looking at what they term the difference in exchange rates, between the US dollar and the Zim dollar. So I think when it then just gets down to bread and butter issues now. Is it important for me to set aside money for investing, or do I just need to just concentrate on bread and butter issues?
Right. Alphonse, you mentioned how there would be those different options, and of course you spoke to the savings aspect. How relevant is saving in an economy like Zimbabwe, where mattress banking has become the order of the day? Of course, the monetary policy statement made an effort to try and cultivate that culture of putting money in the bank, but week in, week out, we hear cases of robberies that are taking place at people's houses, at big institutions, and you hear tens of thousands that are being robbed of individuals by the robbers that are now on rampage across the country. May you speak to the aspect of saving and the relative use of banking within the Zimbabwean context?
Yeah, that one is quite a bit one. Why? Basically, Zimbabweans have lost confidence in the banking sector. That's why we have people being robbed of thousands of dollars in their NMBs, national mattress banks, as you say. So, yeah, it then boggles the mind with why then should people save when all those risks are available? But it's just definitely you have to save. But where are you saving becomes the key issue. We've got assets that that are easy for us to save in. People from way back, we have been using cattle as a form of savings. If you go into stocks, you're also saving, but you're also investing at the same time. But the key issue now is a lot of people need to be told about these aspects. I tell you, if you walk in the streets of Harare and you meet a random person, definitely they will tell you, why can I save? Why should I invest in this Zimbabwean terrain? But it's very incumbent for everyone to save, because no one knows what tomorrow holds. So it becomes important even to save whatever that you can be able to. Where you're saving now, it now depends on your risk appetite. Some people are less risk, while some people are risk averse, while some people are risk loving. So for us who are risk loving, we know where to save. We go into stocks, we go into crypto, we go into...
But I want you to speak more a little bit later on the subject of diversification, so perhaps we can get into breaking down some of those aspects. Now, Charity, we know that there are some kind of informal savings that we have got spread across not just Zimbabwe but even across the continent, with different kinds of cooperatives, even the advent of Maround as we have grown to know about them. May you speak a little bit where that is concerned?
I'll tell you, just to add on to what you said, that people have lost confidence in the formal sector, but I'll tell you, when it comes to Marounds and all those informal settings where people are contributing monies to say that, okay, after 3 months we then share, or to say after 3 months X is going to get so much, Y is going to get so much the following month, and so on. It's quite an exciting type of saving or investment, if you may say. And it's something which is very, very prevalent, especially amongst the women. And I think it works because most people are getting into businesses, most people are starting up businesses, most women are buying assets out of these rounds.
Right. Let's talk about the aspect of mobile money. Mobile money has helped to bridge the financial inclusion gap in Zimbabwe. How important is that to the advancement of the lives of individuals operating in Zimbabwe's economy?
Yeah, it would be an understatement to try to give any rating to what mobile money has done to Zimbabwe. Why? It has led to a lot of improvements in the financial inclusion aspect, because even someone is down in any rural area, definitely they now are included in the financial space. Mobile money, for example, in Zimbabwe, we've got EcoCash. You can find an EcoCash agent anywhere in Zimbabwe. After the ban, currently I think there are more than 60,000 EcoCash agents. We have now sprouted around the country. So mobile money is given access, financial access to everyone. Wow, something that has not been there when we're just relying on traditional banks. Remember, banks can just have one bank in a whole district, but with mobile money now, agents are sprouted everywhere. Right. So it makes it easy for anyone to access funds from the diaspora. People get their monies through Mukuru, EcoCash, Remit, etc.
Now we've got your Omari is also a part of the bouquet. And of course, you've got your One Money, your Telecash, all of these that are Inbox as well. May you speak to the aspect of the charges? And it's been one of those issues that a lot of the transacting public has had with some of these platforms. How can they be improved?
Right, let's address it like this. Businesses are there to make money. Banks, they also make money through charges. Right. So these mobile money service providers, they're also there to make some money. But the government has tried to minimize the costs. You can find for a cash-in transaction, if I'm cashing in money into my wallet, I'm not charged anything. And that money can stay in my wallet for the next 10 years. Nothing will happen to that $10 in my wallet. But can I put $10 in my bank today and take it 10 years later? How much will it be?
Quite a hard-hitting question right there.
We can go on again and say, okay, right. So if I am now sending money to someone, the government again has played a key role in trying to reduce the costs that are associated. For example, if you're using EcoCash, you find the total round charge for cashing in, sending, or cashing out does not exceed 4%.
And yet, when you then compare that to what you find in other countries, those rates that you're making reference to are somewhat on the punitive side, given also that we've got that IMTT that remains to be in place. Yeah. Would you want to weigh in, Charity?
You know what? As I was just listening to what you were saying, I can see that in hindsight, probably the government and whoever is behind there, they're trying to encourage people to adopt a savings culture, because he said that if you keep that money in that mobile banking space for the next couple of months or whatever, you're not going to be charged any monthly costs. But if you decide to shuffle around the money, of course you're going to face the charges. So I would then think that maybe those that are running the investment businesses or the savings businesses and so on, they can then just come in to say that, okay, if you keep money in your, for example, in your EcoCash for 30 days, you're going to get so much interest and so on. I think it will take away the fear or rather the disappointment that comes with the high, what we call the high charges when it comes to moving the cash around.
Right. Closely linked is the aspect of banking and credit. We have come to an era where, of course, we've got interest rates that are relatively higher than elsewhere at 35%. That, of course, being the policy rate. At the same time, you've got some of these players, you've got your Zim Money, your Zim Loan, that seem to be charging what appear to be interesting, I would call, interest rates. Would you want to weigh in on the credit system that we have got in Zimbabwe?
I would say that whenever anyone decides to jump into the credit space, for example, if you say that you want to borrow money, there's a lot of thought process that you need to put into. You need to understand all the terms and conditions. You also need to understand your business. Why are you borrowing? how much money do you exactly need? Because you might find that in some of these informal settings, you can go there and say you want to borrow, for instance, $2,000, and then they'll give you $1,500. Don't take the $1,500 because you need $2,000. Who's going to breach the $500? Mind you, the $1,500 loan that you're going to get, it is still going to be charged those high interest rates. Meanwhile, you needed $2,000. So I think that if one decides that they want to borrow, it has to be a decision that is well thought out, well calculated before you jump in.
Alphonse, we hear of high interest rates, 30%, 35%, and vehicles get taken as collateral. When you weigh in on the credit regime that we've got in the country?
Yeah, I think that one is
It's an interesting one.
it's a very interesting one. Why do I say so? Because if you look at it, we've got those that small print that always comes in when you are signing those forms. The majority of us don't read that small print. There are extra charges. You might go to a bank or a microfinance institution, 8% per month, but actually the cost of the loan is more than 8%. Yes. Because there are some inbuilt charges that you are not told about. So at the end of the day, we find the cost of the loan becomes higher than what you were told it is. So in the end, I think maybe the government would need to double down on its efforts to monitor all those people. At the end, then again, there's also this other aspect of collateralization, like what you were saying. Banks are the cheapest, but they need loan collateral, which the majority of people don't have. So at the end, we will go to microfinance institutions, we will go to Zimbabwe, to the loan sharks, 30% per month, 60% per month interest rates, and that will always choke the borrower.
Right, now time for us to take a breather. When we come back, we continue with the subject, financial literacy in Zimbabwe. The Mint to be right back. Don't go anywhere.
Catch exclusive interviews every weekday for candid, exciting, and thought-provoking conversations with your host, Erika Ndoro.
We talk about arts, we can talk about sports, we can even talk about politics, and sometimes we venture into a nice guitaristic play. The one story where you can't get out of your head.
Wakatarisa munhu so Erika, like where you're sitting ndozongokona bata face so pasina munhu
wakasiya music yako iyo afro chakuti ndo music manje yemuZimbabwe.
And I'm sure they're still saying the same thing now.
Yeah, so
shona kana kuti chindevere kana mumwe mutauro yemuno muZimbabwe ndiwe iwewe ndiwo rupawo rwako ndicho chidadiso chako.
Catch me, Erika Ndoro, right here on ZTN Prime every single Monday at 7 p.m. whilst we get exclusive.
Ndiroyi vakuti matoti kuroya kuti ayo kwete
nanga nemakuna kuna okuwetera mukuva toda kunzwawo kana kuona umbo hwevidhiyo okuwetera mukuva kana pasina then we talk off wakaita makuna kuna izvi neizvi zvisiri pasamoni
rakunetsa mudzimu wakuda kubuda pana mwana uyu munhu ya aripo futi akaiswa anonga achivhara kuti mudzimu usataura
zvakambitaura zvekukomiti vakachiwirirana kuti ndiri kuunze 75 iyo yakauya imwe 90 ndiri kuunza 25 kutaura kuswera mangwana.
Handina kunanga kwandakaenda, handina kumaprofita kwandakaenda, handina kunanga munhu uroyi. Ndakaenda kunobvunza bhozi mwana wangu ndiakandiudza.
Welcome back to The Mint. We're coming to you live from Zimbabwe's capital, Harare. I'm Eben Mabunda. We are discussing financial literacy, and for that, we continue the conversation with Alfonso Maketo, an author, entrepreneur, as well as a stock market enthusiast. We also have Charity Moyo, a banker, as well as a mining consultant. Now, picking up from where we left off, Alphonse, may you speak to the importance of diversification. You can no longer afford to put all your eggs in one basket, can you?
Yeah, we have all heard about that. It's not an issue. You can't put all your eggs in one basket. But what are you talking of when you're talking of financial diversification? It's just an investment strategy where we are trying to allocate our capital to different asset classes. So, how do we diversify? Are we diversifying by industry, by geography, or by asset, or by any other thing? So long as we are diversifying. For example, if you are geographical diversification, I'm invested in Zimbabwe, I'm invested in South Africa, I'm invested in Zambia on the stock market, basically. So that's some form of diversification. But someone can use it, okay, I would want stocks, I would want to go into real estate, I would also want to go into agriculture, farming, mining, all that becomes what? Diversification. It's more like, for example, let me take a name. Yeah, inscorizing yourself. Yeah. Something like that, yes. So I think the key now is if one asset class that you've invested in doesn't go up well, the other one will definitely go up well. There's that low correlation between most of those asset diversification classes. For instance, real estate and stocks have got a low correlation. When the other one goes high, it doesn't necessarily mean that the other one will go high as well.
Right, so you're just spreading your investments just to make sure that at the end of the day, should something happen to one, on the other end, you remain safe. And
yes.
Speaking to diversification, real estate is also an investment option that one can pursue. Charity, you have been a banker for over 15 years in this very economy. May you speak to the importance of real estate as an investment asset class?
All right, absolutely. I would recommend investing in the real estate at any given day. You'll actually notice that in terms of prices of houses, if you just look at houses, and then if you compare the price of a house in Mount Pleasant as of today and the price of that same house 5 or 10 years ago, you'll actually see there's a marked increase in the value. So if somebody has got some money stashed somewhere, I would suggest and highly recommend that you invest in real estate. And you can also see that at the moment, if one has got 1 acre, they're just not focusing on setting up one structure. You find people are setting up what you call them, the cluster homes. So in a 1 acre property, there's probably 4 or 5 units. So it's quite an excellent investment option.
And yet there are some pitfalls. We are seeing the coming in of land barons and some bogus players that are also on the market, some schemes that are making waves around the country. You hear there's a scheme here, there's a scheme there, and 2 weeks later you hear someone was duped of their investment because they dealt with someone who's shoddy. How can one make sure that they weed out some of those risky elements as they try to get into real estate?
All right. I'll tell you, just like a real estate business, just like any other business, you need to make sure that you do a thorough research of anything that you want to get into. So if you are intending to buy land, you need to investigate more, even if it involves speaking to lawyers that are more versed in the real estate business. I think it's something that is very important. You cannot just jump into the real estate business just because the price of the stand is lower than other pieces of land that are being sold. So it's not really much about the price, but it's much more about research that you need to do before you decide that you want to venture into this.
Right, Alphonse, let's talk about the stock market. What is it? I know that you've written a couple of books on the stock market. What is the stock market, and how can one start their investment journey where stock markets are concerned?
Okay, thank you so much for that one. That one is in one area that I will go to heaven for. Right. The stock market is basically a market or a platform where buyers and sellers of shares meet and engage with each other. What am I trying to say? We've got listed companies, for example, Delta, Econet, that go to the public to raise funds to expand their businesses. Or there are new companies that would want to raise funds to set up their operations. So they sell shares to the public. So if I want to become a shareholder, I go onto the stock exchange. Then I buy shares. I become now a part owner of that company.
Is a share more like a brick to a house?
Yeah, you can say so metaphorically. Yeah, it's not a part ownership of that company. So if a brick is part ownership of a house, I think that the analogy is correct.
Makes sense.
So in Zimbabwe, basically, investing on the stock market is very simple. The government has tried to make everyone, even the child in primary school, to start investing on the stock market. You can simply download a few of the trading apps that we have. We've got C-Trade. We have also got ZSE Direct, which people can use. You can download on the Play Store using your phone in the comfort of your home. You register an account, you get your approval, you deposit your money into the account. Then by sitting like what you're doing, you can buy Delta shares.
Like this.
Yes, you can buy Delta shares in the comfort of your home using a smartphone or even a Mbudzi. Yes.
Right. Using a Kambodzi, I
Yes.
can actually get to buy shares on the Zimbabwe Stock Exchange.
Yes, you can actually do that on the C-Trade platform, where they've got a USSD platform that they have.
Fantastic.
Interesting.
Sounds really, really exciting. Now, I know that Charity, you're very passionate about the inclusion of women in financial dynamics in any economic setup. May you shed more light on that?
I can tell you that our constituency is still behind when it comes to a lot of things that have to do with financial literacy. Like right now, as I was listening to him when he was talking about investing on the stock market, I can tell you there's very much little information when it comes to that information being relayed out there. It's unlike when you compare 20 plus years ago, we would know that just before you get to the news, it's the stock exchange is being flighted on the news, and people get to understand the various counters that are making sense and so on. And then when it also, going back to women, when it also comes to issues of borrowing, most women are not able to borrow from financial institutions because they do not have collateral. So you then find that in terms of growth, women are still lagging behind in all those areas. So I would implore that government, through any of its line ministries, that they possibly pull up their socks when it comes to not leaving any woman behind when it comes to financial literacy.
One more question before we round up in just 30 seconds. May you speak to the aspect of retirement planning?
Of course. When you are working, you obviously need to start planning about what you'll be doing after you're no longer competitively able-bodied. So obviously when you're working, so it's either you're going to get into the stock exchange. For me, when I left the bank, my retirement was mining. So obviously you need to create what we call soft lending.
Right, I'd like to thank my guests, Alfonso Tinashe Maketo, author, entrepreneur, as well as a stock market enthusiast, as well as Charity Moyo, a mining consultant, as well as an experienced banker. And of course, that's a wrap on The Mint today. Do follow us on our social media handles, as Papers TV Network, as well as at ZTM Prime. Your views and thoughts are important to us. Remember to catch us every weekday at 2 p.m. Central African time for the juiciest business stories in Zimbabwe, on the continent, as well as beyond. Amibe Nabunda, the money man, let them do what they do. When we do what we do, we mean business. Thank you for watching and have a good day.